Hey everyone, I'm Anita Sharma. Welcome to Market Call tonight on BNN Bloomberg. He's back, Jaime Carrasco, our gold bull. He's also a portfolio manager at Canaccord Genuity. He's taking your calls, emails, and tweets on precious metals and North American dividend stocks. Here's how to get in touch with us, 1-855-326-6266. Our email address, marketcall@bnnbloomberg.ca. Our Twitter handle, @Market Call. Jaime, how's it going?
It's going great. Thanks for having me.
All right. It's always a pleasure to have you here, sir. You know, we like to talk about gold here on Market Call tonight. Gold spot price relatively steady. Last check, it's back below $1,500. Make the case.
I think that'll change next week when the Fed speaks, right?
All right.
I was here a year ago, and we were talking about gold sitting at 1,300.
Right.
But I think it's important to look at the bigger picture.
Okay.
The big picture is about the currency reserve. Mark Carney came out at Jackson Hole. He said that the currency reserve's in trouble. The Dutch central bank came out and said if the whole system implodes, gold will come back into the fore.
Yeah.
People are talking about the currency reserve.
Right.
The dollar has to be done. And I think that with Trump and what's going on with the Fed, he really wants to kill the dollar to have MAGA. So the dollar in its own, in the way that it's being set up for the global system, can't continue to work. And that's been my thesis all along, that if you look at all of these debts are written in dollars and they have to depreciate. Well, because we're living in a fiat currency system where it's not pegged to anything, we need a reference point. And I think that depreciation has already begun. Now, to me, it doesn't matter what comes out at the other end. What is the new currency reserve?
Right.
What's important is that the process of unwinding currency reserves throughout history has always been the same around gold.
Yeah.
Now, I sent you that chart because I think it's a very important reference point from a year ago today.
Let's bring it up. So basically, we're looking at the gold sector. We're looking at gold itself. We're looking at the Dow Jones Industrial Average. And let's put this in context. You started an initiative with respect to your clients, a wealth transfer initiative that really kicked into high gear when? October of last year?
No, about August. In October, started to show returns. But what happened is that once gold broke above 1,350 to 1,500, we really saw the benefit. Now, if you look at over the last 8 weeks, 5 weeks, we've been going sideways from 1,550 because we've had a massive move. There we are. So if you look at the yellow line, that is the producers. The producers will have the leverage, is what I had, was my speculation. Gold I see as money, which is the orange line. On the blue line, it's gold itself.
Yeah.
Now, the important thing is that you see the side trend that we've seen. That's the 1,500 mark. We've been going sideways.
Right.
But I think people will notice the next move up when it breaks above 1,550. Now,
that's the next target?
No, 1,550 is the high that we got at the last spike, which was sometimes around September. We've been going sideways.
Absolutely.
I think once the Fed,
a bit lower,
next week, I think they're really signaling they're going to ease again. So there's free money coming in. The repo market is signaling that. You know, again, I'm not a gold bull. I'm just have a good understanding of the fixed income market, and the tremors again are coming from the fixed income market. That's what's happening in the repo sector.
Speaking of tremors, we discussed this off air with our producer Aaron Sebeski. Let's dive deeper into this. San Francisco Fed economist coming out essentially saying, you know what, he looked at the results of several foreign central banks that actually went into a negative interest rate situation. He says it benefited their economies overall long term with respect to inflation, et cetera, et cetera. Does that not send a chill up your spine, though? Is he making the case for the U.S., what the central bank that the whole world looks at for pointers? Is he making the case for negative rates for the U.S. economy, for the U.S. Fed?
That's exactly what they're doing. But I think they're preparing us to really get into the money printing. To me, it's music to my ears because I'm already set up. I think in the next move, clients are already working from a much lower level when they get in, and those hedges are working. Now, what I've been saying all along as we go through this consolidation, make sure you start adding that 10% of your allocation within the precious metals, because what we're witnessing is money losing its value. And I think that will continue, especially if the Fed, one of the concerns that you have to see the game is different than in 08, because in 08, the Fed worked with the rest of the central banks. Now they're going on their own because Trump is pushing a completely opposite attitude towards the other central banks. Are they going to bail out Deutsche Bank this time around? I think not. I think we are at the end of the game. And the only way forward is to reduce the value of all of the debts which are written in U.S. dollars, in essence, a currency reserve. So it's a catch-22 all over again.
All right. Well, this is the end of this segment. Great start to the show. Jaime Carrasco, portfolio manager at Canaccord Genuity. Welcome back to BNN Bloomberg. We're with Jaime Carrasco. Let's start with an email, Jaime. It's from Daryl. He wants to know about the bear market. He says he's nearing retirement, holding multiple dividend stocks, but with all the talk about a correction or bear market, I wonder where he's getting that from. Should he continue to hold them and collect their dividends, or bail to cash and buy after the correction? What do you think of that?
Well, I'm actually positioning clients to be a little bit on both sides of the equation. Last fall, I was raising cash. That cash is being spent on convertible bonds. Those convertible bonds are paying about 7.5 to 9.
Nice.
4-year maturity, so I pretty well have bought 4 years with 30% of my money. Now, most of the clients that require income are still generating cash flow from their dividends. Now, it's important to also note that Tony Dwyer, our chief equity strategist, he thinks the market has more room to go up. I would agree with that, because you have to understand that what we're watching is all the flow of funds coming out of the fixed income market. That's going to enter the equity market, but I'm going to say this with a note, with a caution. The best performing market over the last 2 years was Venezuela. Now, that says a lot, because money was coming into the equity market. So it is a bit, that's also going to be very bullish for the precious metals as hedge. And that's why I have that 10% at least, I have clients at a minimum of 20%. Within the dividend component, I'm making sure that the companies are either pipelines, utilities, the big solid ones, that no matter what happens, are going to generate cash flow. And make sure as well that as much of them have cash flow coming from outside of Canada, like the Brookfields or REITs, Dream Global, which just got taken out, but that's why I like that one, right? So I am positioning myself to continue to generate cash flow, but have assets on the side and hedges so that I can benefit from any downside. And I think that's a much better strategy, because you know, the market could go to 40, 50,000 as this money starts to come in and fear really kicks in. But one note of caution, that if you look at currency reserve shifts or debt problems, they have always, the corrections have always finished when gold and the Dow are exactly the same value. In 1980s, 800, 800, in the 30s, 35, 35. So if the market goes to 30, maybe gold goes to 30. We don't know. I don't know how high will it go. I've always worked within gold in the mantra that the longer it takes, the bigger the fiscal mess, so the higher it has to go to hedge against liabilities. Gold is the only asset that's nobody liability.
Can you give a projection? I was trying to get at it earlier in the first segment, but can you give a projection as to where you see bullion hitting by, say, year end? Is that unfair? Or?
I think that's unfair to say. You know, I think that if we break above the 1,500 range, where it's 1,550, we are already back in business with the move we've had. This is just the first correction. Now, nobody thought that it was going to be at 1,500. I was a little bit more bullish.
You actually called it, though. If I remember correctly, you were on the program. We were in the high 14s.
That's right.
After October, and you said it's got some room to go up, but when it pulls back, that's when you're going to see a crowd once again fall into gold.
That's exactly it. Now, how high will it go until year end also has to be measured against all the shorts that are in place. Once we get this break above 1,550, those shorts will have to cover. So we're going to have even more pressure coming higher. We're also going to have other money coming into the new money coming into the play. So I think everything will start to move. What I find very bullish is the fact that the producers are holding on. If you look at that chart, they haven't pulled back. They're holding that pattern, and I think they're the ones that are going to lead, which I think people will notice.
Welcome back. It's time now for Past Picks, courtesy of Jaime Carrasco. I'm going to let you bask in this one. Agnico Eagle, my goodness, up 54%. That's how much our viewers would have made had they purchased this on October 31st of last year, when it was your top pick, sir.
It's still one of my top picks. It's still a cornerstone of the portfolio. What I like about this company is management. They've just delivered in an unbelievable way. They're going to be fully self-sustaining within the next couple of years. They won't need any money. They have a lot of projects throughout the world, all at cheap cost, $600 Canadian, $640 to be, the exact number. I'm not an analyst. I just like how they've executed, and what's really neat about this company is we're starting to see the dividend rise. right? And I think eventually that will continue coming, especially as the profitability grows because of the formula that they have for the dividend. Sean Boyd has just done an unbelievable job in this company. I continue to believe in it, and it's early. Anybody that thinks that this is late, reserves on the ground aren't even priced yet. Most of these companies are trading as though gold's sitting around $950 to $1,000.
Wow.
There's a lot of room. That's what I mean. Once we get this next break, if the producers lead, as I think they will,
they're going to rip.
People will notice. And that early move is nothing. The only people that have participated in this is 1% of 1% who own the precious metals. This is an unloved trade. So there's a lot of money to come here.
Unloved for now, but I have to say, if you weren't a gold bug, the better part of this year, folks, did convert. They started.
They're noticing.
They're noticing.
I'm getting calls, but they're not yet.
Yeah.
That's coming.
Yeah, that's coming. All right. We're looking for a big push in energy. And so far for you, AltaGas has been a big winner, up 24% from last year.
Well, when I bought it,
Brilliant.
when it comes to these guys, the earlier question in terms of dividend raising, I bought it for the dividend. At the time, it had a
that comprises 17% of your return.
Right. It had a big pullback, and I thought it was a really good entry point. I had already done when I'm building a position, I'll take a small half of what I want, and then I wait. That's exactly what happened with this one, and we've benefited. Now I'm holding on because I like the dividend, right? So within the portfolio, it's still there, but it's that equity chunk is much lower than it was a year ago, right? So I will hold on to it. I think that at some point energy will come alive, and a company like AltaGas is more storage, and the winter's coming. And I think it's going to be a hard one.
Yeah, that's good to hear, because for a lot of our friends out west who are just still struggling with the current situation, you're saying that there is some light at the end of the tunnel.
Well, I'm not 100%.
Okay.
I'm not there with the oil producers yet, but this is more of I see it more as an electric generation, storage, pipeline. So it's more of a diversified company.
Okay.
Now, yes, it is tied to the Alberta economy, but again, it goes back to my thesis that when everything goes down, at least there's always a minimum bare economic activity that's occurring, and these guys are in that, right? And that's why they've survived, and I think they're going to be there. Same thing with Enbridge, the pipelines. No matter what happens to the economy in North America, we're going to have a minimum level of economic activity that is required to be filled by some of these companies that are monopolies.
Okay. Cash. This is your third, this was your past pick.
A year ago.
Okay, a year ago. What was your reserve then versus now?
Well, right now I'm only 1% cash. At that point, it's 30%.
Wow.
Right? But it was spent into the decline that we had.
Yeah.
So the thesis on the cash was the fact that as the Fed was rising interest rates, we were going to have to reverse course because it was going to start putting pressure on the interest rate mechanism and the market.
Right.
What happened coming into January? We had a massive pullback.
You did?
They've had to reverse.
Did you go on a buying spree?
I did go, but it was all convertible bonds. I was locking in yields.
Yeah.
Right. So I didn't go into the equity side. I went into the fixed income side, and I'm sitting there. So going forward, though, now they've fully reversed. They've already started to print because of what's happening in the repo market. So quantitative easing has begun, whatever they want to call it. It's money printing. That has already begun, and that's really going to push the markets as well. But do understand that I think it's the last kick at the can of money printing because of what's happening on the fixed income side, not on the equity side.
You're saying folks started noticing gold this year. Well, bonds, I can't believe how many calls we got on bonds when the yield curve started inverting earlier this year. It's a bit out of the headlines as far as now is concerned, but it's top of mind or back in the mind still in terms of how it did spook our investors coming well ahead of Halloween. How do you feel being in the bond market? Are you comfortable there? Are
Not
you
at
building
all.
on your bonds? Okay.
Not at all. That's why I like gold.
All right.
The problem, one of the things that I was a repo trader, so I understand how the repo market works. And I have to tell you that the signals I was looking for in 2008 are bigger today in terms of warnings. So if you look at the percentage increase of the repo market in middle of 08 when things started going haywire, well, the rates were jumping, but they were jumping much less than they are jumping now. So now I would be concerned with the rate, and it kind of really reflects what's happening. First time that the Fed opened the window, it was 3 times oversubscribed.
Yeah.
The repos are rolling over now because they're only 14. Repo is trust between you and I. You being JP Morgan, me being Goldman. If you're seeing that jump in rates, it means that big boys are losing trust among themselves.
Wow.
That's a problem, right?
Okay.
And so the fact that the Fed has had to go 5 times oversubscribed now that the repos are rolling is also a big concern. It's a liquidity problem.
Okay. Jaime, thank you for that. And once again, sir, well done on your past picks. Welcome back. We're with Jaime Carrasco. Top picks time. You teased two of your top picks inadvertently. Let's start with Franco-Nevada.
Solid. This is what I buy from my parents for cash flow. It's a royalty. The dividend, as commodity prices increase, I expect the dividend will continue to increase as part of the formula. So it's a solid one that I would definitely recommend to anybody.
Okay. Parents, perhaps a bit younger, maybe you would want to dip into America's Gold and Silver. USA is the ticker.
This is one of my favorite companies. What I like about this is management has executed in an unbelievable way. All of the companies have been producing their highest grade to stay alive. These guys haven't. They've been producing their lowest grade. They can increase production by almost 300% just by switching the machines from 5 grams per ton to 30 to 50,
wow.
which are waiting for $22 silver to do. And we're going to be producing gold. We're going to pour gold this year, and we're going to be producing by early next year with the new Pershing of the purchase of Pershing. Biggest shareholders are Lassonde, Pierre Lassonde, Eric Sprott, Sandstorm. So big institutional following. I've been in it for about 4 or 5 years now since its inception, because this is Barrick's M&A team that went and started this between them, and they've done an unbelievable job.
Okay, let's round this out with Dynamic iShares Active U.S. Dividend ETF. Would this qualify as a dividend aristocrat?
No, what I'm playing here is the U.S. market.
Okay.
I do agree with Tony Dwyer, our equity strategist, that we might see a blow-off top coming off here.
Right.
And what I think is that if this plays out, it'll be like the top into any massive bubble where, the tulip phase where things go crazy because all the money's coming out of fixed income.
Right.
What I would say is play this for the upside on the U.S. market, but be aware that constantly put a stop loss, because when things are over, this one's over, right? So just let it ride until the end and make sure you move that stop loss so that you lock in your profits when the time is right.
You got to keep a close eye on this.
That's
one,
what I'm going to be doing with my position, is definitely put a stop loss on the way up and let's see what happens. But I think they're going to have to print a lot of money to keep the system going. There's liquidity issues, and I think next week will be very telling when the Fed comes out, and we're starting to hear a lot of warnings of things.
What do you think the Fed's going to do? It's almost like deja vu from their last announcement. There's a big group of people who say they don't want to see a rate cut, but they see it coming down the pipe. What do you think? Well,
I think that the politics have taken over. I think Trump has control of the Fed. I think that's why they cut. So I do think that there's going to be more and more politics, and as politics enter, again, it's the populist wave. It's the 30s playing all over again. It's uncertainty, and what better asset protect you from uncertainty than gold? So no matter what, I think it's going to be a lot of noise. I think at the end of the day, they have to do whatever it takes to keep the system going until the next election. Trump is going to ask for that, and that requires a lot of money printing, and it's starting.
I hear, because I invest in real estate, I often hear, real estate's the perfect hedge. But more and more, I'm starting to hear gold might be.
Well, I think the problem with real estate is the currency, right? The 30s was about paying off all the debts that were written in pounds by bringing up the value of the dollar. They created a brand new dollar. This time it's the dollar that's in trouble, so they're going to have to devalue all the currencies, and we're starting to see that. So the real estate in the value under which you're written it will come down. That's inflation or hyperinflation. The only asset that's going to hedge you is gold. So I think a balance of both is the way to go.
All right.
And the strategy has begun to work. And I think in the next move above 1550, I think people will take note of what's going to happen.
All right. Well, we're taking note of your presence. I know our viewers are quite enamored to have you on today. Jaime, always a pleasure.
It's always a pleasure. Thank you for having me back.
All right. You bet. That's Jaime Carrasco. I'm Anita Sharma on behalf of our senior producer, Aaron Sebeski. We wish you a great night. Hope you'll join us again tomorrow night, 6 o'clock Eastern, 3 o'clock Pacific time. Always